Welcome to Charts and Coffee. Great to see everyone. Happy Thursday or happy day 2 of Powell's testimony. We are going into the second day of what will he say next? And we can measure this. I have some notes here on the left side of your screen. And I'm looking at a few individual symbols that will allow us to understand what the general perception of whatever Powell speak today may be. Everyone's looking at what? Whether or not you believe it's going to happen or whether or not you already think it's a done deal. Everyone's wondering, when are they going to cut rates? Now, it's not a matter of if, although I do hear that from time to time. It's not a matter of if, it's when. And there's a few places we can see it playing out already. By the way, these are all Powell's comments, and Federal Reserve chairs do not at all look to set the traders and investors of the different markets up only to say, no, we changed our mind. That's not what they do. He's tried that before and it was disastrous. And that's why I keep iterating what happened in 2018 Q4 to 2019 Q1. Powell has tried defying expectations to disastrous results. And that's why I mentioned that it's likely not going to happen again. Now, whether or not looking at 6E, which is the best way to understand what's going on with the dollar, am I looking at the dollar because it has any relevance to the uptrend in equities? No. The equity markets, the S&P, the NASDAQ, the Dow, the Russell, can absolutely and have rallied with a strong dollar. Now, if the dollar is weak, that's better, but please don't think we can't rally in the equity markets with a strong dollar. We can, and we have, right? All right, so what about bonds? Can equity markets rally with higher bond yields? They can, and they have. And if bond yields do continue lower, we're seeing the move higher on ZB, we're seeing the move higher on TLT, that's just better, right? So let's separate from, well, equity markets can't rally with a strong dollar. That's just wrong. That's not what the data says. Oh, equity markets can't rally with the yields going up. Again, that's just wrong. If you look at a price chart of the NASDAQ and lay that next to or above a chart of the bond yield, you'll see they don't have to move together. The ZN yields can, if I look at the 10-year for the NASDAQ, for example, the ZN yields can absolutely go higher as the NASDAQ also goes higher. So these are some of the things that, for whatever reason, people like to keep on the sidelines because they think a crash is coming or they think some major drop is coming. And it might. And we always are going to have pullbacks. But and I know that everybody, look, ideology is a scary thing. If someone is convinced that the Federal Reserve is clueless, and if someone is convinced that there's just no way they're going to fix this problem and whatever else, that's fine. But that's going to map to a lot of decisions that are not going to make money. So then, if I see people who are thinking to themselves, Rog, what about the macro of 08 and the this and the that? I think, oh, okay. You want to talk about the markets. You actually don't want to trade them. And that's cool. If the markets are a hobby, and believe me, this is a dangerous thing all of us can slip into, right? If you want to talk about the markets, fantastic. But if you want to trade them, buy the dip. That has been working. If you've been waiting for and I hate to use the word easy, but if you're looking for an easy market to trade, this is it, gang. Find the trends that have index sector stock alignment, right? That is what we want to do. And ultimately, that's where the follow through is going to be. So when I look at the NASDAQ, I think of two sectors. So you might say, okay, Rod, give me a hand here. What is the alignment you're talking about? Where can I go for the NASDAQ uptrend to the sector uptrend? All right, I'll buy into this notion that the equity markets are going up. You don't have to believe me. Just look at a price chart, right? So semiconductors are definitely something to watch, but this is kind of a one-trick pony in that as long as NVIDIA is moving higher, it will probably keep the SMH moving higher, but NVIDIA is moving higher. So why not trade what is and not what we fear? Right? So that's another thing. I always say, trade what we see, not what we think. How about we trade what we see and not what we fear, right? If there is an event that's on the horizon, that's trading what we see. Being cautious, as Powell is talking, makes a lot of sense, right? That's not That's not an unverified fear, right? That is a volatility event. We know Powell's going to create volatility. How about XLC? That's the second strongest sector in the NASDAQ. So if you're looking for where the strength is in XLC, it is Meta, it is Netflix, it is Disney. Those are our three favorite places to continue to look for opportunity in the communications. Disney's probably my favorite. Disney for two reasons. One, it is not as tech heavy as say Meta would be, and it's not as, in many ways, as parabolic as Meta is with that jump after earnings. And it's not as expensive as Netflix. Netflix is really spendy. So I tend to like Disney for two reasons. We use the word scalability. We use the word scalability. What does that mean? That means that the open interest for the strike that I want to buy is liquid enough that someone who has a larger account can trade 20, 30, 40, 50 contracts. Someone who has a smaller account can trade 2, 3, 4, 5 contracts. We're all doing the same thing, just at a different scale, scalability. So it's really important to me to find places where, if an option costs $2,000, how many people can buy a $2,000 option, and in multiples, right? If an option costs $500, how many options can you buy? So would I rather have one $2,000 unit where it's just one thing, or four $500 units? I'd rather have the four. Gives me more flexibility to scale in, gives me more flexibility to scale out. And that's what we like about scalable, liquid, right? Affordable options. And that's where Disney would definitely be something to watch in that group of XLC. But I'll tell you, I got to be straight up. I'm talking my book, right? In this show, I talk what I'm doing, not what I see, not what I think. I'm not speculating on things. You are here to say, okay, Rag, you're an expert. You've been doing this for 30 plus years. What are you doing now with your traders in the mastery? I'm avoiding tech. I actually we haven't put on much by way of tech other than Disney, which I would hardly call tech, but it is in the XLC. We've been avoiding tech because there are better places that are not so attached to the tech narrative right now, which is kind of difficult, right? So if we find the alignment right now, S&P to financials and Dow to industrials are a really nice, calm, organized place. I want calmness. I don't need jumpy, parabolic things. In fact, if you look back on your trades this year, and again, there's nothing wrong with it. But again, I just want for you to set expectations. I've had to do this for myself once upon a time. So if I were looking back at my trades this year and it was full of nothing but things like NVIDIA or SMCI, I have a problem. Not that I haven't grown my account. If you have, fantastic, right? But I have a problem because those events, SMCI, NVIDIA, these are not repeatable things that I'm going to see all year long. So what are you going to do in March? What are you going to do in April? What are you going to do in June? Right? So if we need parabolic moves, if we need these monster moves to grow an account, when things get boring and things get simple and trends just quietly climb higher, like Disney, like GE, like American Express, those are the kind of trades that I put on because I know that structure, that formation, that behavior is far more repeatable and findable, right? So I have nothing against a particular trade just going ballistic, right? Who doesn't love that? It's like a great present, but I can't build my career on, okay, what's the next SMCI? That can't be it, right? So please think about how have you grown so far? And by the way, if you're saying, Rag, I haven't grown my account this year, please think about following the trend and stop listening to people who are telling you that things are about to crash because they've kept you on the sidelines for 2 months and they've kept you, it's an opportunity cost, right? They've kept you from growing the account, which by the way, if things do crash, profit is your cushion. Profit is the pillow. Profit is a safety net. All right. So that's what we want to focus on, not exponential things. And also, please don't buy things like Apple and Tesla, right? So we're getting into a lot of don'ts because if we get the things that we don't want to do out of the way, we can focus on the things we do need to do, right? So don't focus on bottom picking Apple. Will Apple pick up one of these days? Yeah, but not now. right? It's not in sync with the NASDAQ. Same thing goes for Tesla. Really, same thing borderline goes for Microsoft. So find the alignment and you'll find that follow through. So let's get into, and these are, when I open my email, a lot of what I talk about in the morning, the first 5 or 10 minutes of the show, are emails that I get from folks who have done some homework and say, but Rog, isn't this going to happen? And I always try to remind everybody, I don't know what's going to happen. I hope I don't sound predictive in nature, because anything I'm telling you is because we see the trend in price. We see the data in whether that be economic releases, or when I talk about what the Federal Reserve is expected to do, that's what the data shows based on Fed fund futures, based on things that tend to be right more often than not. So those are things to keep in mind. Bond yields are going down. ZB is saying, you know what, Powell? Okay, you might wait until June, but that's okay. We're not mad at you. Yields are going down. We don't need yields to go down for the equity markets to go up, but it sure doesn't hurt, right? Now, day 2 of Powell, you see my day 1 notes there. There we go. Day 2 of Powell is usually a little bit more sedate than day 1. We already heard from him, not as many surprises. We know that we're not going to get a cut in March and May. And by the way, we as in people who are moving larger sums of money, they already knew this. This has been in the Fed fund futures. This has been in the target rate probabilities for some time. Are we disappointed that he didn't change his mind? Sure. But this is not, oh my gosh, they're not going to cut. No, not at all, gang. We were hoping, and it is a hope, that they might think about May. They're not definitely going to cut in March. And could we see some more clarity regarding June? We don't have a lot of clarity regarding June. That's probably the most disappointing thing. But do the equity markets look disappointed? No, because they know the cut is coming. Powell said so himself. We just don't know when. We just don't know by how much. So right now, what we do know based on the data is June cut, quarter point, and 3 cuts total, maybe 4 quarter point cuts total by the time we get to December. That's what the data shows. All right. So I hope that makes sense. And ultimately, if I'm going to continue to buy the dips, I need to get a shirt that said dips happen, right? That's what I need. I need the dips happen shirt. Dips happen, and we want to take advantage of them. They're more difficult with Powell. I will tell you, on Tuesday before Powell, we had a great dip. I chose to be more on the risk management side with that dip by thinking, you know what if we keep dipping? I don't want to have outsized exposure on a morning that Powell could say anything he wants. Like I say, he could wake up in the morning and choose violence, right? So I chose from a risk management perspective to not take the dip on Tuesday, but it was a gorgeous dip, right? So that means that, I opted to stay on the sidelines, but this is where my daily price movement ranges say, Rog, told you so. That's the action on the 5th, right into the gray zone. And now we're moving higher from there. Not a lot, though. We're stuck in a range. There's no doubt. And it makes sense that as we get day 2 of Powell, and we have this little thing called non-farm payroll. Don't know much about that. It's one of the most important macroeconomic releases we get. Second to inflation data, because the Federal Reserve has a dual mandate of jobs and inflation. But so we no sooner get past Powell and then we get non-farm payroll. All right. And so that's what we're seeing. This is not the equity markets getting thumped, right? Not in any way. They're a little bit of wait and see mode, but certainly within the context of an overall bullish market, right? Okay, so question here on now. Let's focus on uptrends. So if you've been listening to me at all over the last few weeks or last few months or last 3 years that we've been doing this show, focus on trends. The broader averages are trending. So if you're looking at a stock that doesn't have a trend, I would say just no, right? So not that I'm saying in any way that now or T could not continue higher. But what I'm saying is, let's just grab T. And there's 2 places I can look at T. I can look at XLC, which is a combination of communications like Meta, Google, Netflix, and then a bunch of telecommunications, T-Mobile, Verizon, and telephone, and AT&T. What's in an uptrend here? Very little, gang, and none of it has to do with the sort of telecommunications side. Throw Charter and Comcast in there. T-Mobile, Comcast, Verizon, Charter, they're not moving higher. Could they benefit from the rising tide of XLC? They might, but why not play the uptrends here? This is why this layout is how I scan. People ask me all the time, do you scan? Do you use a scanner? I do not, right? I look at this. I look at relative performance. So there's 3 places that I'm interested in here. Meta, Netflix, Disney, and that's it. Whittle away. So no, there's no interest in that, because if the overall markets are moving higher, NASDAQ in terms of the overall market that this belongs to, NASDAQ's moving higher. XLC is generally moving higher. It's the second strongest index. And then I've got these 3 stocks. All right. And this is where I talk about what we trade is more important than how we trade it. In this case, buying Meta, Netflix, and Disney has been, generally speaking, offering better follow through than, say, buying Comcast or buying Charter or buying Verizon or buying even T, right? So be careful with that. It wouldn't, and so again, all I can share is what I do, but it would not end up on my radar. All right. It just would not end up on my radar. But these 3 would. We have about 4 or 5 setups that we are looking at right now in the Sector Secrets Mastery. And again, I talk my book. These are things we are doing or are planning to do or have been doing, right? We've been in and out of GE. We've been in and out of Uber. We want to continue to take advantage of the strength in industrials, because this gloriously has nothing to do with NVIDIA and tech. And I am loving not trading tech right now, right? Oh yeah, bots reminding me we're still in Uber. Yeah, my mastery folks, don't freak out. Yes, we are still we're still in Uber. So what we want to do is ask ourselves, is tech the only game in town? And right now, I don't think it's the best game in town, not based on what I see. There are a lot of other indices that have more going for them. When I look at industrials, the top 3 names are moving higher. That is much better participation. Right. I don't give a rip about market breadth, by the way. That's just one of those things that people love to talk about, but they don't think and remember that the market breadth, overall market participation does not matter. Key heavily weighted stocks and key heavily weighted sectors in the indices matter, which means a very small amount of stocks are what's influencing the broader averages. So please don't think I'm looking at market breadth. That's useless to me. Relative performance is really powerful. Take a look at the relative performance in tech. It's not Microsoft or Apple. What is it? It's things that are actually sitting in semiconductors, right? When I take a look at consumer discretionary, where this is where Amazon is number 1 weighted, Tesla's number 2. Is there a lot to love in Excel? Why? It's actually Amazon, Home Depot, Lowe's. Well, why would Home Depot and Lowe's be up? Because there are expectations for lower rates and ITB is up, right? So when you keep following that expectation of rates going down, it doesn't have to be today. You will see so much is already moving in that direction. And whether or not Powell changes his mind, at least for now, let's take advantage of that. Question on gold? Absolutely. This is where this is not a trend. Be really careful, because gold can be extremely volatile. But since bonds are moving higher now, gold moving with it is great. Gold's taken off in the last handful of sessions. I'd rather see a trend here. But yes, as you can see, daily price movement ranges have been very consistent. Day trade it, swing trade it, but gold is definitely on the bullish list. And by the way, this is not a new phenomena. Gold has been on the bullish list since December of last year, when it got above the equator, when it got above the 200 propulsion, which is the 8 exponential moving average, and the 200 crossing. For the most part, that's the logic behind those white dots. When we're above the white dots, that's that bullish hemisphere. All right, gang, I hope that gives you something to think about. I hope that gives you a lot to ask yourself about, how am I building my account right now? And if you're not building your account right now, ask yourself, well, what is it that I'm thinking is going to happen that's keeping me from the long side, right? If you're focused on tech and you're frustrated, right now, I don't think tech's the place to be. That's not where we're growing our account. Forget what I think. That's not what we're doing. Industrials, financials, right? Those are really much better, more organized trends. We don't always need rocket ships to trade, right? Those nice organized trends are things we can find pretty much 12 months out of the year, right? Okay, so there you go. I'll see you tomorrow, same time, same station. Be good to each other, gang.